Okay. Hello, Vivek. How are you?
I'm fine. How are you?
Good, good. Thank you.
So we are just in time to start. Chair, would you want us to wait for some more people to join in? It's about 1 minute to 3 o'clock.
Yeah, I think we should wait for, because it's an important topic and many may be waiting for 3 p.m. Joining. So let's not rob them of the opportunity to hear our very dynamic Central Council member Pramod Jain ji.
Sure, sir, sure. In fact, 2 of our former presidents have specially sent the request for them to be able to join in.
Yeah, that's
Great.
the charisma of Pramod ji.
Sir, it is only of the topic.
Pramod ji, namaskar.
नमस्कार
Ranjana Agarwal.
हाँ नमस्कार
कैसे हैं आप?
बहुत बढ़िया
Looking forward to hearing your analysis.
so nice of you.
So many disclosures are now required as directors on boards of companies. We are going to, we have a tough time ahead.
Yeah, but these all are already available, na? So you have to just disclose it. So nothing much more than that. You don't have to take it up.
lawyers के लिए तो बहुत आसान हो जाता है क्या ना, और फिर वो बोलेंगे कि हम बैठे हैं ना, हम किस लिए हैं? नवीन जी, do you agree?
Yeah, absolutely, ma'am. Absolutely.
हाँ, तो lawyers के लिए तो बहुत आसान है नहीं?
But the thing is, we are all working towards ease. Yes, but we are all working for ease of doing business.
Right.
I don't know whether all these are going to would be facilitating business or would be facilitating professionals. At least we are professionals, but we are on platform of industry. So it's a dilemma, I should say.
True. No, but we have to look at the larger interest of the society as a whole. And I do feel, can you hear me? Is there, my network is not working, kya?
Yeah, absolutely.
नहीं, आपकी आवाज आ रही है।
Absolutely.
अच्छा, ओके, मुझे थोड़ा सा लग रहा था। नहीं तो yes, ease of doing business is so important. Otherwise, people really get scared of entering into any kind of business in India, or changing its structure also, for that matter. Too many confusing provisions in different laws. They are not speaking to each other. And as a result, if one complies with one, you are caught in the other. And in any case, you are caught. So as far as penalties are concerned, in one, if you give a little bit of a leeway, in the other, you have to be careful. So those issues are there.
True.
So we have quite a few.
Vivek, should we start? Because it's already 3.
Sure, please, we can start.
Yeah.
So a very good evening to everyone. It's I would say, a fateful evening for us to discuss key takeaways on the amended Schedule 3 of the Companies Act 2013. A very important topic concerning a lot of people in the industry. Therefore, actually also evoking a lot of response from members to know and understand the details of this. We are almost on the second last day of the Tika Abhiyan launched by our Prime Minister. And there is a lot of activity around COVID. And as a chamber, we've been taking many steps, not only through our Corporate Affairs Committee, chaired by Mr. Naveen N.D. Gupta, but also through other committees to help resolve the issues of the members. One of the most recent uh, initiative which we have taken on the guidance of Mr. Naveen N.D. Gupta and Ms. Ranjana Agarwal, our co-chair for the Corporate Affairs Committee of PhD, of actually getting to know which all members are actually facing any problems in any of the compliances. So for all those participants who have yet not been able to get back to us with their issues on compliances or dates of compliances not being met, please do let us know. We will be happy to take your concerns forward and ask for relaxations from the government on this aspect. Allow me to now start the program officially with the remarks and the welcome note by our chair, Mr. Naveen M.D. Gupta. Over to you, sir.
Thank you, Vivekji. Very respected very dynamic Central Council member, CA Pramod Jainji. We are really privileged to have you here today among us, and on a very important topic, that is amended Schedule 3 Companies Act, and you would be taking us through various provisions that have been introduced, new disclosure requirements, and implications it is going to have on various aspects of financial reporting. My co-chair, very respected Ranjana ma'am, uh, Vivek ji, Sohail, uh, dear participants, on behalf of my committee, Corporate Affairs Committee and PhD Chamber of Commerce, I extend a very warm welcome to all of you to this very important webinar on Amended Schedule 3 Companies Act 13 key takeaways. And I wish you very happy and prosperous new Samvat and beginning of Navratri from today. And this webinar, I should say, is happening on a very auspicious day in that sense. And the topic that we are going to discuss, that is MCA has introduced white circular on 24th March 21, amendments in Schedule 3 of Companies Act. We all know Schedule 3 prescribes the format for financial statements, that is balance sheet, profit and loss account, cash flow statement. They have introduced new disclosure requirements. Virtually, they have amended each and every aspect of Schedule 3. So it's a major amendments that have been carried out, and it is having an implication for both auditors as well as auditees. If I talk about auditors, they may say, presently, at this time when presently we are undergoing and passing through a season of financial reporting. So as auditors would be more concerned about the criteria and Schedule 3 applicable for the financial year ending 31st March 21, but definitely it has some implications, and those would, since we are on a platform of PhD Chamber of Commerce, so we are also concerned about members of industry, particularly small and medium corporates, where generally they don't have such a robust team to take through compliances. So in that context, this webinar becomes very important, because corporates have to prepare and may be required to carry out amendments in their financial reporting softwares, so as to maintain, preserve the information that would be additionally required for these new disclosures, and to compile it and to retrieve it subsequently. And during the year also, this information may be required for internal auditors and concurrent auditors. So it is of relevance at this point of time, at the beginning of the year, that we discuss all these amendments that have been brought in Schedule 3, because many places and in our standards on auditing also, statutory auditors are bound to rely upon the reports of internal auditors. So many places this has to be verified by internal auditors, and they can verify only and only if the accounting software is appropriately amended to preserve and extract this information. Furthermore, next year, audited financial statements also would be required to give previous year figures. So in that regard also, it is of relevance that members from industry are well versed with the new amended Schedule 3 by which has been which has been introduced by MCA. Furthermore, there are many amendments which have serious implications, like just to encroach upon the area of Pramodji. One particularly interests me is the disclosure that has to be given as regards the transactions of the company with the struck-off companies. As we are aware that during last 3-4 years, MCA has undertaken very widespread exercise in identifying shell companies and striking them off on various counts. Now, particularly, I have been receiving many queries from many members and members in industry that whether only the transactions during the year with the struck off companies, which is not possible because the companies have already struck off, or if those transactions are previous year and those are only appearing as opening and closing balances, those have to be disclosed. And furthermore, to what extent it would have implications, because now the disclosure has to be also given as regard Benami transactions. So whether if any company say has issued shares to a particular company say 20 years back or 25 years back, and in today's date, as on 31st March 2022, those companies are found to be struck off, whether those that transaction would be treated as shares issued to a Benami concern, because whether under the Benami law that those companies which have been struck off would be known as would be considered as a fictitious entity. So these are serious implications, I should say, is going to have on past transactions as well. So industry has to be well versed and have to do a lot of exercise during the current year itself, so as to make sure those disclosures are ready and the companies are ready with these information and various implications. And there would be a lot of work for lawyers also, Ranjana ma'am, because whether those companies which are struck off would be treated as Benami, because those would be areas of concern for companies, because naturally if some shares are issued, because these type of shareholders would be there even in very big companies also. Even I'm not taking any names, but mega companies also would be having such shareholders where shares were issued and those companies are no longer exist, because in larger groups there may be many NBFCs which may be holding some shares at some point of time, but subsequently with the influx of time there are nobody to take care of the compliances, and due to technical or non-technical reasons those have been struck off over the period of time. So these would be certain implications here, and there are many similar areas which would be of concern to many corporates as far as these disclosures are required. जैसे कहते हैं ना कि गेहूं के साथ गुण के साथ गेहूं भी पिस जाता है, तो I think it's a case of I should say over ambitiousness in which these disclosures and over regulatory overreach taking us through. But all in all, this webinar is very important, I should say. This is of relevance for everybody: auditor, auditees, CFO, members of audit committees of board members, so all concerned. And who could be better to take us through than Pramod Jainji? He runs a very he's popular by a very important portal that he runs for the members of chartered accountant profession by the name Expert Panel, and he's very popular in a sense. Generally members says that you post any query on this expert panel and next 30 minutes, you get a professional social responsibility in a very effective manner, sir. I welcome everybody to this very important webinar. Not taking much time because we are all here to hear Pramod ji. Thank you, Vivek ji. Over to you.
Thank you very much, Chair, for those opening remarks and setting the tone for today's webinar. As you said, with the ever-increasing stringency in the regulatory framework, un bhi pis jata hai. And, the disclosure requirements under various laws, this changes in the, a lot of additional disclosures are required to be made in the financial statements by this amendment which is happening. So we will have, of course, our speaker of the day, Mr. Pramod Jain, elaborating on that. But before that, briefly, can I request Mr. Aseem Chawla, the co-chair of the Corporate Affairs Committee, to kindly share his remarks. I'm not too sure whether you're still able to switch on your camera or not.
I could not see Aseem ji and Rastogi sahab. So my salutations to Aseem ji and Rastogi sahab if they are there. Very good afternoon to you, Aseem ji and Rastogi sahab. Vivek ji, I don't think they are there.
Good afternoon, Naveen ji and Mr. Sehgal, Ranjana ji.
Sorry, Rastogi sahab, but when I started, I could not see your panel, so that's why I missed your magnanimity, sir. I'm really sorry from the core of my heart.
No, I delayed switching on my laptop, linking the meeting. Not that it was not on, but very good afternoon to all of you.
Very good afternoon, sir. Very good afternoon.
Pramod Jain is an excellent choice because he has been associated with our group also, and I have been interacting with him for almost more than 25 years at least. He's an excellent resource.
Thank you.
My best wishes to you, Mr. Jain.
Thank you, Rustagi.
Thank you very much, Rastagi ji, for welcoming Mr. Pramod Jain, our speaker for the day. And thank you for joining us. Indeed, a pleasure, as always, to have you with us, spreading your charm, if I can say, with knowledge and those very nice smiles which we always get from you, sir. It's very encouraging.
Welcome.
Nice to see Aseem ji now. Aseem ji, kindly unmute yourself.
We all are slaves of technology, and I was seeing the beaming faces of my chair, Naveen bhai, Ranjana ma'am, Pramod ji, and all of you. Thank you very much, and thank you for the reprieve last minute. I've been hearing all of you, and hats off to our chair, for picking up topics which are really need of the hour, and we couldn't have had a better faculty. I'll just echo what Rustagi Saab had said, and without much ado, I think you were all talking about the lawyer's delight and whether it's a field day for lawyers. All that I can say is that things like management representations are far more important. The great education of the awareness of the community started under the dynamic leadership of Naveen ji when he was at the helm of our mother institute. I still call Institute of Chartered Accountants of India as my mother institute. But at a very high level, if I were to look at where a lens of a counsel to the board, or what Ranjana ma'am said as somebody who's chairing the audit committee, I think somebody might even say that, well, it's an auditor's right to attend the general meeting, but not his obligation under 146 of Companies Act. The directors have their responsibilities under 166. But there are a lot of areas which do tickle. How would one deal with a simple situation of the amendments proposed in para 7 regarding additional information with regard to undisclosed income, especially in the context of listed companies or companies which are widely held companies and not really private limited companies, as we call them, quasi partnership under company law provisions, how would you then try and justify the internal financial controls, when you are making some disclosures with regard to undisclosed income, which I know do not happen in a very rational manner, and it's more like a plea bargain. आप ये कर देंगे तो हम वो नहीं देखेंगे. So where do you draw the line, and Pramod ji, for the benefit of all the stratas of our members, how important will become your management representations, and how important is the obligation of the auditors in terms of various essays which you have. I remember when probably we would have done our accountancy days, Naveen ji, I mean, we had the AAS and then they became essays, and they are now auditors' responsibility in terms of documentation. Remember, privilege is not available to chartered accountants. I don't know whether NCLT will do a subpoena and call for information from the chartered accountants. Things like trade payable dispute, who's going to decide? Qualitative details of immovable property, details of Benami property, very rightly said by the chair with regard to relationship with struck off companies. Now, with this, does crypto get legitimized? I mean, we'll hear from Pramodji. I think he's the authority on the subject. And what about the overall package of Schedule 3 read with Caro and the delegated legislation in terms of the Companies Act, the rules framed with regard to audit? You piece all these three together. Is auditor in a more difficult position than the auditee, as rightly brought out in the introductory remarks by our chair? So this is all I can say, but Pramodji, we all are very eager to hear you on this very auspicious day.
Thank you, Asim bhai. Thank you very much.
Yeah. Over to you, Vivek.
Thank you, Asim ji. Thank you so much. And yes, I think it's a very auspicious day, as rightly pointed out by the chair. A very, very happy Navratri to all. And may Lord Durga actually bless us with a lot of health, and which alone will actually help us, take care of the compliances and, of course, the changes made in the amended Schedule 3 of Companies Act. So may all of us be blessed with good health, and so are our families. So before I invite Mr. Pramod Jain for our main talk, a few lines about him. Mr. Pramod Jain is a fellow member of the Institute of Chartered Accountants, Institute of Company Secretaries, and Institute of Cost Accountants of India. He's a qualified information system auditor and an insolvency professional. He's a member of the All India Management Association and has been elected as the Central Council member of ICAI for the period 2019 to 2022, as also mentioned by Mr. Naveen N.D. Gupta. Apart from being member in more than 25 committees, groups, directorates of ICAI, he is chairman of the Committee of the International Taxation, popularly called CITEX, Taxation Audit Quality Review Board for the year 21-22. Earlier, he was the chairman of the Valuation Standards Board and chairman of the CSR Committee of ICAI for the year 2021. He is the vice chairman of Committee of MSME and Startup, women members. I could go on. So for the sake of time, I think we get down to the topic. Over to you, Mr. Pramod Jain.
Thank you very much, Vivek ji. Namaste to all, and very, very happy Nav Varsh, Hindu Nav Varsh to welcome summer 2078. Happy Navratris and happy Vaisakhi and happy Gura Puja. So many festivals today. So wishing all the best wishes on this auspicious day. The chairman of the Corporate Affairs Committee of the PhD Chambers and my president of ICI, past president of ICI, I always say once a president, always a president, and a very, very dear friend who has led the professional chartered accountants in a way showcasing that how the profession can go ahead, can reach to the heights with his visionary leadership, which he demonstrated at the time of his being president. My all co-chairs, the co-chairs of the PhD Chambers, Asim Chawla ji, P.K. Rustagi ji, Ranjana Agarwal ji, and the Secretariat of the PhD Chamber Corporate Affairs Committee, Sohail ji and Vivek ji. I thank Naveen sir for giving me an opportunity to share my views on this amended Schedule 3. We'll be talking about the Schedule 3, and very rightly the tone set up by Naveen sir and then also Asim ji, that though this Schedule 3 is applicable for the accounting period commencing on or after 1st April 2021, that is for the financial year 21-22. But very rightly said by Naveen sir that the importance thereof needs to be taken care of for the financial year 21 also, for the 21 year also. So we'll be talking about that. I'll be sharing a presentation and discussing the amendments and all the points which Naveen sir has said and Asim bhai has said. We'll be talking about all those things and going ahead. Any queries, anyone can just unmute or ask a question.
So,
yes.
So Pramodji, as you were about to share the presentation, and our once again kudos to you. The whole issue of limited review and the impact on the financials for the year ending March 21, and two aspects: the layered company and the utilization of borrowed funds. I think those are also something, but I'm sure you've given a lot of thought on it. But the aspect and the spillover on the year which has just gone by, and what is your prognosis in terms of not to take the year which has gone by, in terms of while the whole process of signing of the accounts will happen in the due course for the year which has gone by. So I think that would be something which would also weigh in the minds of about 100 plus participants which we have today and are eager to learn from you.
I'll try and cover that question, sir.
Okay.
Right. So starting with if you talk about when we talk about Schedule 3, basically it's divided into three parts, right? Schedule 3, Division 1, that is for those companies who are complying with the company's accounting standard rules, 2006 accounting standards. Division 2 is for those companies who are following Ind AS, and Division 3 is for NBFCs who are following the Ind AS. So amendment has been made to all the three, and the amendments are basically common, except the one change I would say in Schedule 2 and 3, which is related to statement of changes in equity. So let us talk about the changes in Division 1. And I'll just talk about which are the changes which have been made in Division 2 and 3 both. All those changes which are common to all are basically related to disclosures. If I talk about Division 1, there is a one change in the general instructions, one change in the balance sheet format, more than 25 changes in the general instructions of the balance sheet which requires disclosures, and statement of profit loss, again one change on the face of it, and general instructions for the statement of profit loss, again 4 changes. Similarly, if I talk about Division 2, general instructions, again one change, balance sheet on the face of it 2 changes, statement of changes in equity totally substituted, and general instructions for balance sheet more than 28, and statement for profit and loss 4 changes. And Division 3 similarly, statement for changes in equity has been substituted, general instructions for balance sheet more than 23 changes, and general instruction for statement and profit loss 3 changes. Going with the changes in the balance sheet, one of the important changes is rounding off. In the case of Ind AS, the Division 2 and Division 3, rounding off of the financial statement is mandatory. But in the case of Division 1, it is currently voluntary. So from next year, it would be mandatory. And it depends upon the turnover of the company. So Schedule 2 and Schedule 3 also turnover to total income, they have said. And what is the rounding off in Schedule 1? If the total income, if my total income is less than 100 crores, then I can round it off to 100, 1,000, lakh, million or crore. And if the total income is more than 100 crores, then 100,000 not allowed, only lakh, million or crore. Now, what to do in March 21 financial statement? Now, for March 21, if I am following the Companies Accounting Standard Rule 2006, that is Division 1. So March 21, it is voluntary, but March 22, it will be mandatory. So why not do it in March 21 itself? Because if something is left, you can take care in next year. So make it a habit, round it off, because it is currently optional. It is voluntary. So we can do it this year itself. This was an amendment which was required, that the heading of the property, plant and equipment, that is corrected, and that is corrected in all the 3 schedules. Where for the assets in the non-current assets, where it was a property, plant and equipment, they have added property, plant and equipment and intangible assets. And after that, the first line, tangible assets have been done away with, and property, plant and equipment they have introduced. So intangible asset is thereafter. So these are, I would say, cosmetic changes, but rounding off from turnover to total income is one of the important things to take care of. Now, this is an important change which is there in all the 3 schedules. We currently are already giving the disclosure of the shareholders who are holding more than 5%. Now, what they are asking is the changes in the promoter shareholding and their changes during the year, irrespective of their percentages. Now, what is a promoter? Promoter, again, they have said it is the same which has been defined under the Companies Act. So suppose there is a shares allotted during the year. So from that date, you have to take care. If it is existing, then you have to take accordingly. So promoter shareholding is to be now separately disclosed beneath the notes to the share capital. So that is another requirement. The name of the promoter, the number of shares, percentage of total shares, percent of change during the year. These all would be required from March 22. So please see who is a promoter. If you see the definition which is given under the Companies Act, a promoter is the one who is disclosed as a promoter in the annual return. One of the criteria. Other criteria are also there. So a promoter may be a person who is actually not holding any shareholding. It can be there. It can be there. So case to case, it would vary. So please see accordingly. Now, 2 small changes which would change the classification. One is, we all know the current maturities of long-term borrowings, which we used to disclose as a current liability. So from March 22, it will not be disclosed, classified under current liabilities, but it would be reclassified as short-term borrowings. No, there was always a confusion. There is a long-term borrowing. So current maturity, that is to mature within the next 12 months. Why it is not short-term borrowing, but why it is current liability? So it is there since 2012 when the Schedule 6 was amended. So it is since then that the current maturities of long-term borrowings was classified as current liabilities. Now from 22 year ending onwards, it would be classified as short-term borrowings and not current liabilities. So next year, take care of this. Similarly, security deposits, they have reclassified it as non-current assets instead of loans and advances. So if it is a current asset that is repayable within 12 months, then not short-term loans and advances, but it would be current assets. So security deposit also being reclassified from loans and advances to current assets. These are mere reclassification, so not impacting as such other than the calculation of certain ratios. Now the important ones starts. One of the very important is trade payable aging. Now, we have been talking about it. I've been talking about it in various seminars since a number of years, that never the trade payable aging was asked. But I used to tell all the auditors and even certain independent directors that you should ask for the trade payable aging. Kitne saal se pending hai? Now the trade payable aging is required to be disclosed for less than 1 year, 1 to 2 year, 2 to 3 year, and more than 3 years. And then dues to MSME we were already giving, but whether it is disputed or not, that is also required to be given. Whether it is disputed, whether it is payable. Now the question, if you just visualize, for March 22, when we'll be finalizing our financial statements, so we'll be saying in more than 3 years, say suppose amount is 10 crores. So previous year figure is also required. Here again, more than 10 crores if you are saying. So please see what is the explanation which the management will give to various stakeholders, that why such amount is pending to be paid for more than 3 years. Now, various stakeholders would be taking this disclosure very, very seriously, that how good paymaster it is. How good paymaster it is. Or it could be that if you are not working right now, as the chairman sir said, Naveen sir said, that we are thinking only in 22, not in 21. So when you in 22, you are going to see during the year, you say, okay, I'll reduce to 2 crore, I'll pay. So will the question not be asked that to whom these were made payment and why, and the confirmation from 10 to 2 crores? If this 21 or itself, it is less than, more than 3 years amount is less, then the period of limitation would start, whether it is actually payable. The question is, it is a duty of the management to ensure that financial statements which are prepared are true and fair. And the role of the auditor comes to further give their opinion that it is true and fair. So first, management would be able to say, yet these amounts are payable since so many years. Is it true and fair? Are they actually payable? And if not payable, why they have not been written off? Why they have not been written off? This question would be asked from the management. So this would be very, very important. So 21 and 22 both. So this year itself, when you are finalizing the financial statements for 21, please have that aging. See what all are disputed. And the question would again arise. What is a dispute? Mere exchanging certain letters would be dispute, or dispute in a court of law is only would be a dispute. If I talk about MSME law, the word is not dispute there. The word is, I suppose, where the person objects within 15 days. So dues to the MSME, disputed, undisputed, and then the aging. When we'll be giving in 22, take care that we'll have to give it for 21 also. So please prepare for that and have a reason that why it is not payable. If it is payable, you are not paying. What is the reason? 2 to 3 years, more than 3 years, 1 to 2 years. What is the reason? So that disclosure, the aging would be required to be disclosed in the notes to the accounts. And similarly for the trade receivables, the debtors, again, disputed, undisputed, doubtful. Here again, we have been giving only less than 6 months and more than 6 months from the due date. Now it would be less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Again, previous year figures would be given. So will the management not respond that if it is due beyond 2 years, 3 years, is it actually receivable? What are the efforts taken? If they are really good, and if you are saying doubtful, why a provision thereof has not been created? Why it is not written off? What is the action taken by the management? Now, these disclosures would be very, very helpful for various stakeholders, whether it is an investor, whether it is a banker, and even income tax. Even income tax. Why not? When it is payable more than 3 years, 2 to 3 years, they will just ask for them only now. So that thing would become very, very important. So please take care in the year ending 21 itself. in the year ending 21 itself, because for 22, the financial statements, the previous year figures in 21 is also would also be required to be given. Then another aging they have asked for is capital work in progress or intangible assets under development aging, which are currently in progress or temporarily suspended, because they must have seen that various entities are having capital WIP since years and years and nothing has been capitalized. So if it is overdue or has been exceeded its cost compared to the original plan, then when it is to be completed, that also is required to be given in case of a project which has been temporarily suspended. So again, when it will have to be given for 22, for 21 also it will require to be given. So what are the explanations? Maybe the management are having those explanations. 100% they would be having an explanation. So work over this in 21 itself. Because though in 21 it is not required, but when you will be disclosing in 22, you'll have to give the details of 21 also. So capital work in progress, again, a huge item. Here again, in the what we say fixed asset chart, actually it is property, plant and equipment or intangible asset reconciliation. So there, when we are giving the disclosure, another disclosure has been added separately where there is a change, the amount of change due to revaluation. If change is more than 10% in aggregate carrying value, net carrying value of each class of PP, that is separately required to be disclosed. So they want to know that is that change due to revaluation, and the change is more than 10%, so separately required in the PPE chart, I would say. Now, another very important disclosure which would be required to be made in the notes to the accounts. The title deed of immovable property which are not held in the name of the company, and the disclosure in the chart is required to be made for even the immovable property which are held in the name of promoter, director, or relative of the promoter, director, or employee of the promoter, director. Because we have seen number of cases. This disclosure was earlier. This opinion of the auditor was already required in the CARO. Now they have put that requirement first on the management. If I just put it the CARO clause 1C, which the auditor is required to report, but it was seen that sometime it was missed. So now the first duty has been casted upon the auditee, the company. And you see this CARO 2020 has been extended by another year. So that would be applicable for all financial statements starting on or after 1st April 2021. So Schedule 3 also has been consequently extended, amended for the financial period starting on or after 1st April 2021. So if you see from here onwards, when I'm talking about the disclosures which are required in the balance sheet, we'll see that on all these, maximum of these are already included in the CARO, where the auditor has to give his opinion. So from where the auditor would give the opinion, first the management will have to say, and the management will have to put it in the notes to accounts. One example is this, that in that immovable property chart, where the immovable property is not held in the name of the company, then this whole chart is there in Schedule 3, which says that is that immovable property held in the name of the promoter, director, or relative of the promoter, director, or employee of the promoter, director. So that this disclosure would be required to be given in the notes to the accounts. Another important one. We've been talking this with the MCA, with the IBPI and others, that wherever revaluation is required, that revaluation should be done by a registered valuer. But we have seen in umpteen number of cases, even in the India's valuation, if you see division 2 or 3, there also they have said that wherever a revaluation in a Companies Act is made for any property, plant or equipment, the valuation has to be done by a registered valuer only. We all know that this registered valuer are the professionals who have qualified the course which is conducted by IBBI. All the 3 institutes are having such agencies to coach the registered valuers. So now, and also the first in the notes to the accounts, the management would be saying that if wherever there is a revaluation of the PPE that has been done by the registered valuer, and again, the auditor will have to report that yes, where the valuation is done, that revaluation is done by a registered valuer. So what the auditor has to report, that they have asked from the management itself. So please take care during the current financial year. If any revaluation is done of any of the assets of a company, please get it done only by a registered valuer, right? Registered valuer defined under section 247 of the Companies Act, right? Another important disclosure required in the notes to the accounts: loans or advances in the nature of loans granted, not taken, to the promoters, directors, KMPs, and related parties. All related parties defined under the Companies Act, not as per the accounting standard, either severally or jointly, where they are repayable on demand, where they are repayable on demand, or without specifying any terms or the period of repayment. And in this case, you'll also have to give the person the loans advance, such advances with a percentage of the total advances. One might say that it is already there, required to be disclosed under AS 18 as well as section 186 subsection 4. But the AS 18 and 186.4 does not talk about the terms that is repayable on demand or without specifying any terms, period of repayment. So in such cases, please see in March 21 itself, are the loans and advances which are made to such related parties, promoter, directors, KMPs, and related parties, what are the terms? Are they repayable on demand? What are the terms? Whether it is on interest, of course, it has to be at a rate of interest as per section 186 subsection 7. The auditor is giving his opinion on the compliance of 186, 185, and 186 in the CARO. Now, this repayable on demand or without specifying, again, that has been added in CARO 2020, clause 3F. So the first, management would have to state whether such loans are granted, which are repayable on demand or without any specific terms. They want to see that where is the money of the entity being used. So here, take care where the money is given to the subsidiaries without any terms, without any period of repayment. The disclosure is there. The amount is to be given. Percentage to the total advances is to be given. So when you have to give it for 22, you'll have to also give it for 21. Please, all the management should take care of this, right? These amendments are made just to, I would say, facilitate the auditor to report upon the CARO. Because first duty to prepare the financial statement is of the management. So please take care. Another important change, where the company has not used the borrowing from the banks or FIs, for specific purpose, for which it was taken as of the balance sheet date, details of where it has been used. If I see the CARO clause 9C, if I have to see the CARO clause 9C, that is only for the term loan. That is only for the term loan. But here, if I see practically if I see where the borrowing is for specific purpose, normally it is term loan. For the specific borrowing, specific purpose, CC limits are not covered out there, right? So here, where the company has not used the borrowing for the specific purpose, the requirement is there to be disclosed in the note to accounts. And the auditor would, of course, report in Caro clause 9C. Another disclosure, Benami property. Now, for a Benami property, the disclosure is required only and only where any proceedings have been initiated or pending against the company, nothing else. So the company would first state where any proceedings under the Benami Property Act, the prohibition of the Benami Property Act has been initiated or not, pending against it or not. So it will have to state that in their notes to accounts, and auditor would be required to comment upon that as per the Caro 2020 clause 1E. Right? So that is required. Another important. Now this is again very, very important. Where the company has borrowings from banks or the financial state institutes against the current assets of debtors, stocks, and like. And they are filing the quarterly statements, quarterly returns. They have to now disclose in their notes to accounts whether these are in agreement with the books of accounts or not. Because many a times it happens that to the bankers, the details are given different and in the books it is different. And if there is a difference, then the reconciliation thereof is to be given. Now, it happens many a times that the quarterly statements are not filed for 31st March, but say 28th March or something like that. Whatever date it is, as on that date, was that in agreement with the books of accounts? Was that in agreement with the books of accounts or not? And if the variation is material, then the reason for the discrepancy has to be given. Now again, when this detail would be required to be given for 22 year ending, this reconciliation would be required to be given for 21 year ending also. So please prepare and ensure that these are in agreement with the books of accounts. The auditor also is required to report in Caro, but there the limit has been given where the borrowing is exceeding rupees 5 crores. But the management has to give for even if the borrowing is for 50 lakhs or 1 crore or 2 crore. And these are applicable to all companies, whether it is small or not small, whether it is India-based or non-India-based. These details are required in each financial statements. So kindly see, the management should ensure that whatever is given to the bankers are actually tallying with the books of accounts. Because first requirement here would now be to report in the notes to the accounts, which would be forming part of the financial statements. Right? Ratios. If I talk about ratios, ratios have to be given, this 11 ratios. And along with what is the numerator, what is the denominator. And again here, if I talk about what is required to be given is in case there is a variation as compared to the previous year by more than 25%, then the explanation for the variation is. Again, here, the auditor is required. Auditor is required under clause 19, of the Caro. And what he is required to state? The auditor is of the opinion that no material uncertainty exists as on the date of the audit report that the company is capable of meeting its liabilities existing at the balance sheet date, as and when they fall due within a period of 1 year from the date of balance sheet. So based upon these ratios, when Caro 2020 came, ICI came out with a guidance on Karo Karo. And they specifically asked MCA, okay, you are talking upon based upon the ratios, so kindly define the ratios, because it is based upon the ratios which is to be reported upon. So now these ratios would be given in the financial statements by the management. If you see, current ratio, debt equity, but what about this trade receivables turnover ratio, trade payables turnover ratio, inventory turnover ratios? These would bring out that how effective a company is doing a business. What would be the explanation where a company's turnover is 100 crores and the receivables are 110 crores? Or inventories turnover is 100 crores, inventories are 60 crores. So this huge ratio, the explanation needs to be taken care of. These are again just the calculation which the management will have to provide in the notes, along with what are the numerator and denominators. So that is again required to be stated, right? Another important change, where the details where the company is declared a willful defaulter by the bank. So in case a company is declared a willful defaulter, they have to just state in the notes that it has been declared a willful defaulter as per the bank FIs, the criteria is given as per the RBI guidelines. And auditor would have to report, because there is a question which they have to report upon, this clause 9B. They'll have to report upon that. So the first the management and of course, when it is given there, so the auditor would have to see that it is adequately disclosed and correctly disclosed. So duty is both on the management as well as the auditor. Now here again, another amendment which has been made. Utilization of the borrowed funds and share premium. That what was the purpose of the borrowed funds? Both where the company has advanced and companies has borrowed. Both. Where the company has advanced to any other person or entities, including foreign entities, which are called now intermediaries, with the understanding, whether recorded in writing or otherwise, that the intermediary shall directly or indirectly lend or invest in other persons or entities identified in any other manner whatsoever by or on behalf of the company, that is the ultimate beneficiaries, or provide any guarantee, security or like, or on behalf of the ultimate beneficiaries. Now, this first, because the auditor is required to report on a similar clause. Now, again, the management would first have to ensure, representation, what Asimji said, management representation, of course, it would be there. But now it has become a part of the financial statement itself. It has become a part of the financial statement. What was the purpose of borrowed funds? Was there a pre-intention to lend or invest or give a guarantee by the other party? Or if I have borrowed, by me. So there are certain entities who are engaged into such transactions. So these are to be reported in Schedule 3. And of course, auditor duty is to, if the entity says no, it is not for that purpose, then the auditor's duty would be there for the taking a representation, doing his audit essays, what Asimji said, and then giving his opinion there. Another, what Naveen sir said, and very, very important, the relationship with the structure of companies, whether as an investment, whether debtors, creditors, shareholders, or others. I've been saying this since the time the MCA struck off various companies suo motu, after giving due notice and all those things. There could be a company, leave aside shareholders first, but the other investment, debtors, creditors, loans which the company has given or taken, Now, if that company's financial statements are having such amounts outstanding, because the detail which is to be given is not for the transaction during there, but the outstanding balance. And then a outstanding balance, when you will be giving at the year end, you have to give along with the relationship, and then you will have to give for the previous year also. So one has to see whether that company was struck off during the year or it was struck off 3 years ago. Now, suppose a company was struck off 3 years ago, and the current company which the management is preparing the financial statement, it still says that I've got investment into a company which is struck off of say 10 crores. Then at the end, the company says my financial statements are true and fair. How that is true and fair? My debtors, my creditors, I'm saying I have amounts to receive from a company which is struck off. I have to pay to a company which is struck off. Is it true and fair? In my view, question arises, no. The person is not existing when it is struck off. And in case the company says, I want to go and revive. So have you talked to their erstwhile management? And do you have got that representation or the writing in writing from them that they would go and revive the entity? If not, then how that balances are kept in the company? Why they were not struck off? Why they were not written off? Then the balance sheets are, financial statements are not true and fair. Are they reflecting the amount which are actually receivable, payable, realizable? If they are with the struck off company still outstanding, then they should have been written off. Or if not written off, then of course it would be doubtful. And then again, to keep them in the financial statements, what is the comfort which the company is having? Again, which I just repeated earlier. I just told earlier that yes, whether the company has got a comfort level from past management, they are going to revive, and have they revived? How much period has gone? And if they're still there, they've not revived. Investment, I have to follow the AS. Actually, if it is not realizable, the value is zero. How it can still contain? And about shareholders. You know, when the struck off companies came, that time we took a lot of discussions. There were a lot of discussions. So everyone said, okay, investment, debtors, creditors, others, okay. But what about shareholders? The auditors doesn't have the duty. But now first the management have to say that their shareholders, yes, what Chairman sir said, Naveen sir said, that for a large entity, listed entity, it would be very tough to verify that the shareholders are struck off companies. All others, of course, they can do. But the shareholders, they're huge. They will have to verify that all the companies, they are still active or not. They will employ certain professional to ensure that. And if the shareholders are not existing, then to whom the shareholding belongs? A big question. A big question. There could be very few companies where 100% shareholding is of the companies who are struck off companies. What will happen to them? If they are already struck off, how is the AGM held? How is the AGM held? In the past few years, a lot of questions will arise. So this disclosure is required. This disclosure is required in March 22. Please check this year itself. Please check this year itself. A huge issue out here. Because there is a general feeling out there कि जिसका कोई नहीं होता उसका भगवान होता है, but for such assets जिसका कोई नहीं होता उसका government होता है. So actually they belong to the government. So please rethink again, discuss again, right? Especially with the balances which we have, the entities have, the struck off companies. Please be very careful about it. Also, the company has to report for any charges or satisfaction which are yet to be registered with the registrar of companies beyond the statutory period details and the reasons thereof. Now, any charge which was required to be registered could not be registered. Or satisfaction was there. Now, the one of the very common example here would be the loans taken for vehicles from banks or NBFCs. There the charge are not created. But yes, that is required. Yes, that is required. So now they have to give the details, because now the charges which are not registered, they cannot be registered beyond the due date. They cannot be registered. So the reason thereof, so you have to give in the notes to accounts, and whatever the penalties are to be levied by the MCA, they would be taking care from here. So please ensure to whatever, these are no new laws. These are the existing laws which a company had to comply. Only the disclosure thereof is required to be done. Right? Compliance with the number of layers of companies, we have the definition beyond 2 layers. So it is not allowed. So whether that compliance has been done or not, the company has to state in their notes to the accounts whether the due compliance has been there. Currently, there is no particular requirement I see in the CARO, I suppose. But yes, the companies would have to disclose that in their notes to the accounts. Then in the case of arrangements, mergers, demergers, and similar arrangements, whether the accounting in the books are in accordance with the scheme and in accordance with the accounting standards or not, and if they are in deviation, report that. You know, sometimes I felt when I was reading this that these are the things which were the questions which the auditor needs to ask and report. But currently, they're not asked from the auditors, these one. But the company is required to disclose in their notes to the accounts in the case of such arrangements. But very simple thing, the moment they are brought in the financial statements through the notes to accounts, the auditor will have to verify each and every fact which is stated in the notes to the accounts. Anything which is inconsistent with the real facts, he'll have to report. So all these which have been brought into the notes to the accounts, that will have to be certified by the auditor through his audit report by giving his opinion, taking into account the standards on accounting, the materiality and all those concepts. So whatever has been brought, certain items have been brought to facilitate further for the auditors to report in the CARO. But which all those, like this one, struck off companies, not asked from the auditor, but when once put in the financial statement, it will be the duty of the auditor to verify this too. Right? And if you say as a company itself that no, this is wrong, is this wrong? If you say, if I have a company and I'm still having that, keeping those balances in the books of accounts, the outstanding balance with the struck of companies, can I myself say that is true and fair? I don't think so. So please take care of all these things. These were the changes in the balance sheet, certain changes in the profit loss. First of all, because now the rounding off would be on the total income basis, so the revenue word has been replaced with the word income. Secondly, in the revenue from operations, another line item has been added for Section 8 company grants or donation received. Now, this one is important, which Asim sir also said. Undisclosed income, which are not recorded in the books of accounts, which are surrendered or disclosed as income during the year under income tax, unless immunity under the scheme like Vivad Se Vishwas, or like the scheme was there earlier. and whether the previously unrecorded income and related assets have been properly recorded in the books of account during the year or not. Now, this seems when you told, this is already a requirement under CARO 2020, which the auditor will have to report under clause 8. So again, first, the management will have to disclose that if in the income tax any income is surrendered and there is no immunity, has that been disclosed in the books of accounts? So the details thereof is required to be given, and the auditor is required to report in the CARO clause 8.
So just to sort of make a intervention here, Pramodji.
Yes, Asim sir. Yes, sir.
The idea is, of course, to align with CARO, and therefore this might be a little pain point going forward when the new CARO is implemented in its letter and spirit by the auditor.
Yeah, but they have to already do it. So management is also, they have to report. So management was, as you said about MR, now the MR is as good as my financial statement itself.
Yeah, I mean, the new disclosures of Schedule 3, I mean, just trying to imagine the plight of a enterprise which does not have a big establishment, I mean.
Sir, in those cases, they won't be having these things also, no? Like cryptocurrency or virtual currency. Most of the companies won't be having it.
Indeed, but this undisclosed income, I mean, I don't know, survey and all those things are a little more prevalent anyway.
Yeah, I fully agree and appreciate. But then wherever an income is surrendered, then they have to bring that out in the books of accounts. Huh?
Yeah.
So how that has been brought about, so that disclosure is required. Right? And where again, very rightly pointed out earlier also regarding this cryptocurrency and virtual currency. A lot of debates are there. A lot of debate is there, whether that is legalized or not legalized. But I don't know, I was just seeing the IPL. There are ads for investing into cryptocurrency, Bitcoin. I don't see where the RBI says that it is banned. So there are several entities who are, when they are rendering their services or selling their goods, they are receiving the money in the cryptocurrency. So what they want is that, okay, you have done that, kindly disclose. Because what I recollect, earlier time also RBI itself wanted to start its own cryptocurrency. So let's see. But yes, currently, if any entity, any company is trading or investing into cryptocurrency or virtual currency, the details thereof is required to be disclosed. It is not saying it is banned or not. Of course, a few months earlier, I would say, I got one of the friends who wanted to incorporate a company to trade into cryptocurrency. So that was incorporated already. So MC is allowing. So I'm not discussing upon the legality of the cryptocurrency. That is a subject which can be discussed in detail. But yes, if the company has traded or invested into cryptocurrency or virtual currency, the details thereof is to be given. CSR, one of the very, very important disclosures which have been added. Because in the CARO clause 20 also, the unspent amount, depositing that within the Schedule 7 fund within next 6 months or ongoing project, next 3 years, opening of a separate bank account, those details are required. So this details of the CSR, amount required to be spent during the year, amount of expenditure incurred, shortfall, previous year shortfall, reason for the shortfall, nature of CSR, all those are required to be disclosed in the notes to the accounts related to CSR. So for March 21, please take care up to March 2020, the CSR was comply or explain. If you don't spend, explain the reason thereof. From March 21, because of the amendment made by on 22nd of January 2021. Now the CSR, you have to, if you have not spent, you have to create a provision. And if that amount is not for an ongoing project, then you have to transfer that within 6 months to the Schedule 7 fund. And if it is for ongoing project, then within 30 days, open a unspent CSR account. Otherwise, the penalties are on the company maximum 1 crore and on the officer in default 2 lakh rupees. So please take care. For March 2021, you'll have to create that provision which was earlier not mandatory, right? Right. So this change in Schedule 3 they have brought it. Division 2 and 3, of course, mostly the disclosure which were there in Division 1, it is same. In the financial liabilities, again, this lease liabilities have been added. This statement for changes in equity has been substituted. Both previous year figures and current year figures have to be separately disclosed. And also the fair value of investment property revaluations have to be done by only RV. Again, Caro clause 1, it is there. And Schedule 3, the ratios which were there, 11 ratios. For NBFCs, these are 4 ratios which we already gave in the for the RBI disclosures, right? So the time which was given to me, I just rushed so that I'm able to complete within the time. Still, I have exceeded by 15 minutes. This was the portal expertspanel.in, which Chairman Sir talked about. More than 25,000 answers have already been given by more than 110 experts throughout the country. Anyone can sign up. It is all free and subject-wise it would be there. This presentation also I'll upload at this place. Articles presentation subject-wise you can see. Anyone can do it, is free of cost. And of course, I'll upload this presentation on this website and this mobile app also. Now, thank you for giving me an opportunity to share my views. In a very short time, I was able to at least talk about the amendments which were all made by this Finance Act.
Pramodji, I received a couple of queries regarding that layering of company. Can you elaborate a little bit more? What is the intention behind it, and what would be the implications basically if the companies are not complying with it, and back to back the money flow is there? Because in the case of groups, generally it is seen funds flow. There are NBFCs, and similarly in the case of builders where there are many land holding companies. So in this regard, if you could throw a little light on this.
Then, sir, if we talk about layering, it is just like investment to further investment.
Absolutely.
So up to two layers it was allowed earlier also, and currently also up to 2 layers it is allowed. Beyond that, it is currently also not allowed. So because they could not find it out, the non-compliance of that provision. So now they have casted this duty upon the company itself to disclose that. So if one is doing, one has to specifically go into that definition section and see this year itself whether how they are covered into that definition of 2 layers or not. Well, it is not that it is merely certain portion of the investment which is to be made. It has to be more than a specified percentage where the investment is made. So that needs to be seen, I would say. But disclosure karna hai, sir. There is no other way out.
Pramodji, thank you. This was very eloquent and very user-friendly in terms of your verbiage and expression. As always, you are very lucid. What are those 3 or 4 good advices which you want the membership and the corporate affairs group should take away? Because we are comprised by both mix of practitioners as well as members from industry. Cutting across spectrum. I mean, we have worthy company secretaries here, learned senior chartered accountants also, and in-house. So what's that? Because we the ultimate objective is one, but we may end up looking at things from different lenses. So what are your 3 or 4 valuable insights or advice going forward as these disclosures get more refined and more precise?
Sir, if I talk about, most of the disclosures are, they're not changing any compliances. They are basically the existing compliances for which the disclosure is required to be made. But there are certain disclosures which would be giving more insight into the operations of the company, like the aging of trade payables, trade receivables, capital WIP, the relationship with the stock of companies. These are the disclosures which a company, if they are having such a simple example, trade payables more than 3 years, continuing for 6 years, still we are saying yes, they are payable, or receivables more than 3 years, 4 years, 5 years, and they're continuing. So how that is true and fair? The basic intent of a financial statement that it has to be true and fair. So if the management itself is saying that it is true and fair, receivable and payable, though it's outstanding for so many years, they should have a reason thereof. Capital WIP chala aa raha hai saalon se. Why? Struck off companies, again, I've got debtors, I've got creditors, जो कि struck off companies हैं, तो actually देना लेना है कि नहीं देना लेना. So these are not compliances, but these are the general, I would say, corporate governance and pure basic accounting, which needs to take care of. So these could be certain items which were not in the compliances, so they might not have been taken that seriously earlier. Ratios, your inventories are too high, debtors are too high, so looking into all those things. So their working, their operations, that is all coming into forefront, which would be very important for any stakeholder. And here I just said that it would be very important even for an income tax authority. So all those things would be very, very important.
That's very helpful.
There are certain Q&A which have been posted by members. So let me just take those questions. And the first one is from Mr. Ronak Gulecha. He's basically inquiring, Caro is not applicable for small companies. So what about disclosures under notes? Will all these detailed disclosures apply to small companies as well? The first one.
Very good question, Ronak ji. Ronak is very, he's my relative from Bengaluru. Okay. Ronak ji, very important point which you have just pointed out, because Caro now for 21, the small companies are the turnover of 2 crores, and 21 and 22, the Caro would be for 22 for companies whose turnover is up to 20 crores. So most of the companies would be going after Caro. So the responsibility again still remains, because these notes are applicable to all the companies, even small companies. So the disclosures would be there. And when these disclosure in the notes are there in the notes to accounts, whether there is a Caro or non-Caro, auditor will have to take care in an auditor's report to ensure that whatever is given in the notes to accounts are true and fair. So they are very smartly brought that out in the notes to the accounts. Whether that Caro is applicable or not, auditor will have to see into that.
The second one is basically it's a procedural. From where basically to check the status of a struck off company?
Everyone knows, very simple. Go to the MCA website.
Yeah.
MCA website, master data check kijiye.
Absolutely. And then the next is on the relationship, the same. And then there is a query by Sandeep Seth, Mr. Sandeep Seth. In case of corporate guarantee, assume that company X Limited has issued corporate guarantee on behalf of loans taken by Y Limited, and Y Limited is declared as willful defaulter. Whether in given circumstances, company X Limited shall disclose such facts about Y Limited being willful defaulter declared and its consequential impact, if any, in the books of X Limited?
As per this amended Schedule 3, the requirement is only of the company of which the financials are created. But when the guarantee has been given out there, and they would be coming there in my contingent liability. So when that company to whom I had given the guarantee becomes a willful defaulter, so my liability starts. So I have to be very careful in reporting that as a contingent liability or creating a provision thereof. So see the facts and accordingly take a call.
I think we have, I think these were the queries those were raised.
एक क्वेश्चन है ब्रजेश ठक्कर जी का, how far it is practicable to check the strike off status where the list of receivables payables are quite large? You know, the companies knows who are their customers and who are their suppliers. So they know much more than a professional can think about that. So it would be, they would be seeing that what are the amounts, since how now this aging would also help to a great extent, I'm telling you. So the things would come out, Brajesh ji, and it would be possible. It would be possible.
Vivek ji, it's over to you.
Thank you, Chair. I'm just pleased to announce that we are joined by Mr. K.S. Mehta and Mr. Sanjay Bhatia on the panel, who are both our former presidents. Thank you, sirs, for joining us. It's
Thank you,
indeed a
thank you,
privilege
sir.
to.
Namaskar, Mehta sahab and Bhatia sir.
Namaskar ji, thank you. Very nice. Thanks.
Thank you.
Sir, any questions or any clarifications which you may like to ask or inquire about?
No, I think the requirements are so much now that I think it needs time for all of us to really grasp and understand all this. And I think day by day, as you said, that even if it is applicable for smaller companies, and whether the company is Tata or Birla or a smaller companies, so the requirements are same. So I think that's something which really one has to look at, that what really can be done for SMEs or MSME or SMEs separately, rather than, certain requirements, if the government can look at that for SMEs, the requirements may be lessened, so that because they do not have those kind of experts and other people with them. So I think that's the only point which comes to my mind.
We will take it forward, sir.
Thank you.
I have a small question, with the permission of the chair, to ask Mr. Pramod Jain.
It's all yours, sir.
Thank you. Mr. Jain, I just wanted to know, in a scenario when there are now regulations or disclosures which are required to be made for any outstanding dues, especially to MSMEs. An organization has an outstanding from an MSME, which even the auditors feel should not be paid. Would that still come under disclosures?
No, you are saying that there is a company who has received supplies from an MSME and that is not payable.
Yes, the auditors now for
auditors are afterwards, first management, why it is not payable?
The management had changed, and now the new management feels that that is not payable, and they hide behind the guard that even our auditors are not satisfied that this payment should be made.
I don't think so. MSME laws allows like this.
Yes.
MSME laws clearly says that the moment the goods are received or the services are received. So if there is objection, any objection is to be made, that objection should have been made within 15 days. So if that objection is not made within 15 days,
right,
then the amount is payable. Or have you gone into any court of law against them? or you have received, the company has received any representation or any letter from that MSME that it is not okay, we are comfortable in not receiving it. Otherwise, they can even go for the interest, and non-provision of the interest 3 times of the bank rate. The issue would be on the management as well as the auditor if the amount is material.
Okay. That's a
What
good
is the-
input. Thank you.
Pramod ji, what is the implication if the MSME outstanding is not declared by in the, I mean,
It is the first duty of the management to ensure, to state that the amounts, the trade payables are bifurcated into dues to the MSME and non-MSME. So what is the, because they have to now file the form MSME 1 also. So if there is any due, whether they are dealing with the MSME or not, it should not be that they are receiving invoices which contain the Udyam registration. And still they say that we are not aware that we are dealing with the MSME. So such entities, all entities have to be very careful, because now Udyam registration has been mentioned in all the invoices. So the payment schedule has to be very careful, very, very careful.
and a related question with this is that if this is a dealing between 2 MSMEs, so then what happens?
Same, hardly matters. It is the person who is liable to make the payment.
Okay, whether
He doesn't get any benefit that he's an MSME, so he can pay late.
Okay, okay. Thank you.
So I think we've had a wonderful session of knowledge sharing and exchange of ideas and thoughts and questions. And on a fateful day, fateful evening, being the start of Navratras, and can we call upon, if I can say, the Durga power of our committee, Madam Ranjana Agarwal, the co-chair, to kindly propose a vote of thanks. Over to you.
So I'm very honored to be proposing a vote of thanks on this occasion, especially on this auspicious day. And chahe Durga ho ya Saraswati, I think we all pray to the God of knowledge over here. And thank you so much, Naveen ji and the entire committee of corporate affairs to organizing such a wonderful masterclass, and no one better than Pramod ji. I'm really delighted and to hear your presentation, very lucid, crisp, to the point, and I've understood completely. And I think you have spoken as an auditor, and from the side of the institute. So I would say to the industry stalwarts sitting over here and participating, and I hope many of us over here will honor and subscribe to greater corporate governance and transparency. And the whole idea of disclosure is actually to make life easier for everybody. Auditor, of course, will become very happy that, now it is on the onus is on the management to disclose more and more and talk about and disclose issues relating to how the business is run efficiently and the operations are run efficiently. And the auditor will then happily verify and give its conclusions and opinion. Now, the problem is for those of us who, for some reason or the other, due to exigencies, due to various economic conditions, will get into a little bit of difficulty because of these disclosures. And to that extent, I think we will have to live with this kind of a requirement in today's time, and sustainable if you want to be. Then I think what Pramodji has labored to emphasize, that it is good for transparency and corporate governance. It is good for the board of directors. It is good for all stakeholders to actually embrace this change, because the law was already there, and more disclosures are now required. So I'm just hoping that all of us look at this from that perspective and try to inculcate this behavior into our financial statements going forward. I do think you have very clearly, and I don't have to sum up each and every point that you might have brought out, especially with respect to undisclosed income, or with respect to, say, struck off companies, or with respect to trade payables, and the disclosures relating to that. I think we are very thankful to you for putting it very well. And thank you, Vivekji, and Sohail, and the whole team at PhD, and all our sponsors over here. Our past presidents, Sanjay Bhatia ji and K.S. Mehta ji, who have joined these deliberations. Thank you for joining and giving us the support to this committee. And I think with these words, I would again thank everyone for this seminar, very important seminar.
Thank you very much, madam, for
Thanks
that
to all.
hearty
Thanks a lot.
vote of thanks. And it indeed was a pleasure to actually conduct this program this evening, such a useful and a knowledgeable program. I'd like to thank our chair, Mr. Naveen N.D. Gupta, for always inspiring us, our co-chairs, Mr. Asim Chawla, Mr. P.K. Rastagi, and Madam Ranjana Agarwal. Thank you, Mr. Pramod Jain, once again, on behalf of the chamber and all our leadership. Our special thanks to Shri K.S. Mehta ji and Shri Sanjay Bhatia ji, who have actually motivated us to do things to a larger and a greater extent by participating in today's webinar. My heartfelt thanks to my backend team, Shivani and Suhail, to help me conduct this program. Thank you very much, one and all. And stay safe.
Thanks a lot. Thank you very much.